The losses for J.P. Morgan Chase continued today, this time to its stock price, which tumbled more than 9%, as the bank reeled from its $2 billion trading blunder, and bank analysts took aim at CEO Jamie Dimon.
He should have done his homework better.
Mike Mayo, who closely watches the company for the investment firm CLSA, says in April Dimon dismissed concerns the bank was making big bets on credit derivatives that even then were rattling the markets.
1 month ago, Jamie Dimon gave a reassurance that this was, quote, a tempest in a teapot when it came to the company's investments. Here we are 1 month later, and there's a $2 billion loss on their books.
Those risky bets were placed out of the bank's London office by a trader named Bruno Ixil, nicknamed the London Whale. But Ixil was not a rogue, and critics say that raises serious questions about risk management at America's biggest bank. Michael Hewson is an analyst with the London investment firm CMC Markets.
The too big to fail culture really is, it's still there, and it is a concern. And I think what it will do is it will make the proponents of the Volcker rule even more emboldened.
The Volcker rule, set to go into effect in July, would prevent banks from making speculative bets that could put both themselves and taxpayers at risk. It's named for the man who proposed it, the 84-year-old former Federal Reserve Chairman, Paul Volcker.
Do you believe the culture on Wall Street has to change?
Yes.
In an interview for CBS Sunday Morning in March, Volcker said he thought the traditional culture of banking had been distorted by speculation.
My concern has been the health of the banking system.
But banking executives, including Dimon, have attacked both the reforms and Volcker himself.
Some CEOs have been particularly critical of you.
I wasn't aware of that. That amazes me. Are you telling me that? No.
Jamie Dimon, the head of J.P. Morgan Chase, said Paul Volcker, by his own admission, has said he doesn't understand capital markets. He has proven that to me.
Well, unfortunately, I think that they proved some of that to me, too. Their own misunderstanding. How did they get in so much trouble?
J.P. Morgan Chase could face up to another $1 billion in losses from its bad bets. But the biggest loss may be to its reputation and to trust in the banking system.
Anthony, these are huge numbers we're talking about, but let me ask you directly, is J.P. Morgan Chase in jeopardy?
No, Scott, it's not. As big a loss as that was, and that's a big number, the bank is well capitalized. It can absorb it. The company was downgraded by one ratings agency today. Fitch said it's worried about the company's risk management. Scott.
Anthony, thanks very much. The J.P. Morgan Chase story had a lot of folks worried that their 401ks invested in the stock market would take a hit today. And while bank stocks did post big losses, the Dow Jones Industrial Average shrugged it off. It fell just 34 points.